Hello, everybody. Happy May. Hope your spring is off to an amazing start. I just got back from the East Coast, having a trip to see friends and family, and very interesting to spend time with our Sotheby's partners and visit those offices and learn the differences of what's happening in their markets. Before we get into your Q1 2018 market update, I want to talk a little bit about those differences and shed some light on how fortunate you may consider yourself being in a strong and stable market like LA. Toronto, where I'm from, is seeing a softening market. A lot of this is due to mortgage requirements in the lending industry getting stricter. The buyers now have to withstand something that they call a stress test. So this means that if you're a buyer, your debt to income ratio has to be lower. You're going to need 15–20% more cash to qualify for a loan. And it reduces the sales prices. It reduces the opportunities for buyers, and things sit on the market, and it's creating a dip in Toronto, which was a very hefty, fervent market for the past 4 or 5 years. Additionally, the foreign tax for buyers from China or from India, they get taxed just for buying, and not being a primary resident. New York, similar situation. The market is softening. Things are taking longer to sell. The prices aren't as great. It's not as much of a bidding war. And so taking that perspective, when I come back to LA and looking at this Q1, it's making me feel very confident and supporting what we're doing here. So the main takeaways in the first quarter, comparing this year to last, is that there's been a reduced amount of sales. There's more inventory. And the prices are stabilizing. That means they're not going up, and up. It's not as potentially competitive for buyers, and for sellers, it might be shifting the ball from their court to maybe in more of favorable conditions for buyers. So this translates to some great opportunities, and I want to cover those. But before we do, let's just cover the numbers. So we're going to look at, in this market update, our single-family homes. These are the areas that go from the beach, Malibu, all the way through Santa Monica, through Beverly Hills to downtown, the East Side, and then to Pasadena, and it stops there. It's not going to have the South Bay. We're not talking about the Valley. And it's actually interesting here, 60% of our sales volume comes from that $1 to $5 million price point. And then 25% is over $5 million, and then under $1 million. Of course, being that those price tags aren't as big, they don't contribute as much. But that's the market that we're in here. The majority of our sales volume is made up of that luxury purchase, $1 to $5 million. Luxury being anywhere above 1.5. So let's cover Bel Air. Prices have gone up. Number of sales down. Bel Air is a fun area, and I think there's a lot of opportunity there, especially as you get into that western part of Bel Air, butting up against the 405. You're getting a great house, a great school district. You're getting quite a bit of land, some nice views. And if it doesn't have a lot of freeway noise and you're getting a home for, somewhere in the $2 million range, I think it's a great opportunity to see a lot of upside. Just keep your eyes on that. I think it could be like the new area for the next 5 to 10 years. And it's great for people that want those schools, that want that prestigious home, that neighborhood. Bel Air. What's interesting is Brentwood, which is next to there, is seeing lower prices this quarter. And I think a lot of that has to do with the start of last year. Brentwood had some big sales. And this year, we have some high-end homes in the $20 million range that aren't moving. The inventory is up, and the sale prices are down. So that's going to be an opportunity. We're going to cover that at the end of this video. Moving over to the east side, and this is an area that I've covered in all these market updates for the past couple of years. There's a ton of opportunity here. The millennial buyer wants to be in a walkable neighborhood. They want to not necessarily have a pool or a tennis court estate. They're content, not even having a garage. They may have one car in the household, and they can be Ubering or walking around. They're going to be working downtown in these up and coming areas. That's where the opportunities are. And you're seeing these prices reflect that. This quarter compared to last year, prices are up 36%, and the amount of sales are up. So that is, a little overview of the different areas. We're seeing, prices improve, not as much as the 15, 20% in all these key areas, but we're seeing, on the west side, things, stabilizing a little bit more. So what are the opportunities? Right now, for the first time in 5 years, I can say and predict that we're shifting away from exclusively a seller's market into something that might be a little bit more favorable for buyers as well. It's this really interesting middle ground where there's opportunities for both, and I want to cover those. As a buyer, I think you should be focusing on these up and coming areas, especially if you're a first-time buyer and you're going to have that home for 5, 10, 15 years, and you're going to see a lot of upswing. Areas like West Adams, Los Feliz, anything around downtown, Eagle Rock, Atwater Village. You're buying these up and coming areas that might still appear a little rough around the edges. They're not as close to the ocean, but you're closer to downtown. You're where the new millennial buyer wants to be, and you're tracking what's happening demographically in the city. And if you're buying, income properties, duplexes, fourplexes, it's the same thing. This is where the renters want to be. This is where the value add opportunities are. And I think that's the opportunity for buyers is to be looking at these, up and coming areas. The next opportunity I see right now, after looking at this Q1 market update, is look at the overpriced properties. If sellers are still in this mindset where they put something on the market and they're going to achieve 15 offers and sell, 10% over asking price, that might not happen. It's not happening, not as much as it was 2-3 years ago. So look at these opportunities on properties that have been on the market for 90 days. They've been sitting. They came on too high, and try an offer, put in a low offer, and see how it goes. It might be a little bit of back and forth, but these are the opportunities that I see as out there. For seller, it's a seller's market still. You still have, an opportunity to capitalize on a market that's peaked. It's stabilizing, and we might not see as great as gains, and things are shifting less away from the seller's market. But get your house on the market. Take a advantage of this opportunity where we've had record prices and things are as high as they ever have been. Don't wait for things to shift further where the interest rates are creeping up towards 6%. The buyer power is down. There's more inventory. Things are taking longer to sell. That's not gonna help you. The opportunities are very clear for sellers. Is that now is a great time to get it on the market, and that's something everyone should keep in mind. Appreciate all you guys tuning in and following and staying in touch. If you're getting this video through my YouTube page, that means that you might not be following the business page on Facebook. I'm focusing a lot of my marketing on the business page with off-market opportunities. So please jump over to Ari Wintrop Properties and give a like, give a follow. That's where you'll see the video. And look out in your email. I'm going to send out the full market update that we've provided, and you'll have all the numbers to look at and make your own inferences from there. Hope you enjoyed the summary. Please comment, ask questions, give me a call, and let's have a great summer. Enjoy this lovely spring day, and I hope to talk to you all soon.